There's a quiet whisper in the market, a promise of effortless access, delivered through the sleek interface of a free trading app. It feels like empowerment, a democratization of finance, offering a clear path where perhaps before there was only fog and frustration. For many, this arrives at a moment of deep yearning, a desire to take the reins of their financial destiny after feeling overwhelmed by conflicting information, or perhaps carrying the silent weight of past disappointments. The allure of a simple, no-cost entry point can feel like a genuine bomb, but sometimes the most alluring promises obscure the deepest truths, like a calm lake surface hiding powerful currents beneath. This isn't about questioning your desire for financial independence, but about honoring that search with a deeper truth. As Warren Buffett wisely reminded us, price is what you pay, value is what you get. In the world of free trading, the price you think you pay is zero, but the value being extracted, often unseen, is far from it. It's like being offered a magnificent tool for no money, only to discover its true cost lies in the subtle ways it reshapes your actions, your data, and ultimately your potential returns. Today, we will gently pull back the veil on these platforms, not to condemn, but to illuminate. We will ask, beyond the headlines, what's really driving the market when thousands flock to free apps? We're uncovering the hidden truths behind wealth accumulation, particularly how these platforms, despite their zero commission for code, extract value. This includes the subtle monetization of your trading data, the intricate dynamics of payment for order flow where your trades might be rooted for profit rather than optimal execution, and the quiet behavioral nudges within the app's design. These nudges can subtly encourage more frequent trading or steer you towards certain assets, actions that, over time, can subtly erode the very wealth you seek to build. The narrative of immediate gratification, of effortless entry into the market, often overshadows the crucial work of deep understanding and patient strategy. True financial mastery demands a critical eye, a data-driven mind, and a healthy skepticism towards what is presented as universally beneficial. We invite you to join us in this deeper dive, to move beyond the superficial promise and uncover the true economic and psychological impact of these free tools. Don't just invest, understand the why behind every decision. We challenge the consensus that anything in this complex financial ecosystem, particularly something offering direct market access, can truly be without a cost to you. When you place a trade on a free app, a quiet doubt might rise within you. Am I truly getting the best deal? This silent fear of financial loss, this feeling of investment inadequacy, often stems from a fundamental misunderstanding of how market orders are truly processed and monetized. We are often presented with the distortion that payment for order flow, or PFOF, is a benign mechanism simply enabling these free trades. But this seemingly innocuous process creates a direct conflict of interest, a subtle tension between your broker's profit and your optimal trade execution, challenging the very notion of perfect market efficiency. This means your free trade is not necessarily securing the best available price. Imagine the financial system as a vast, intricate circulatory system. Your free trade is like a tiny blood cell meant to flow directly, but instead, it's subtly diverted through smaller capillaries where market makers pay your broker for the privilege of executing your order. This can lead to slightly wider spreads or less favorable pricing, a fraction of a cent here, a fraction there, tiny, invisible tolls that, cumulatively, can quietly drain your financial vitality. It's a shattered expectation, realizing that what feels like a direct path is often a managed detour. To truly discern these underlying mechanisms, you can engage in a three-step quantitative technique. First, analyze your broker's publicly available PFOF disclosures. Second, compare their reported execution quality metrics, focusing on the effective spread versus the quoted spread. The difference can reveal hidden costs. And third, if possible, evaluate historical price slippage on high-volume free platforms against traditional brokers. Do your free trades consistently execute at the less favorable end of the bid-ask spread? This data-driven introspection empowers you to uncover the real cost hidden beneath the surface of free. There's a deep cognitive dissonance many of us experience. We aspire to be rational, long-term investors, building wealth with patience and discipline. Yet, our hands are drawn to the addictive, short-term stimuli of gamified trading apps. This creates a philosophical wound, a quiet struggle about the integrity of our market engagement. We believe in compounding magic, but the app whispers of instant gratification, celebrating every small gain with confetti and notifications. The common distortion is that these gamified features, streaks, push notifications, leaderboards, even virtual confetti are designed to make investing accessible and fun, but let us dissect this. These elements are engineered to trigger dopamine, encouraging impulsive decisions and high-frequency trading. They directly contradict the foundational principles of value investing and the power of long-term compounding, which demand patience, research, and a quiet, almost meditative approach to the markets. What feels like fun is often a subtle manipulation of your inherent behavioral biases. This cultivates a shattered expectation. The thrill of a quick win is often a psychological trap, not a sustainable investment strategy. These design choices foster an overconfidence bias, making us believe we are market wizards with every green candle. They also exploit loss aversion, subtly influencing us to hold on to losing positions longer than rational. This isn't true conviction, it's an emotional attachment, a lack of adequate due diligence, sabotaging your ability to critically analyze financial data. Jesse Livermore, the legendary Great Bear of Wall Street, ultimately succumbed to the emotional rollercoaster of speculation, a trap modern gamified apps inadvertently replicate, drawing you away from the disciplined, data-driven analysis essential for sustainable wealth. To counter these powerful behavioral biases, consider a symbolic exercise. Apply Daniel Kahneman's asterisk thinking, fast and slow asterisk framework to your trading decisions. Recognize when System 1, your intuitive, emotional self, is being triggered by an app notification versus when System 2, your analytical, rational mind, is truly engaged. Implement a 24-hour cooling off rule for any impulsive trade triggered by app notifications. Let the confetti settle, let the dopamine rush subside. Only then, with a clear mind, can you make decisions rooted in data and long-term strategy, rather than the fleeting excitement of a game. Beyond the market's visible ebbs and flows, there's a quiet, gnawing fear of financial loss that doesn't stem from price movements, but from a subtle, insidious erosion of privacy. It's the commodification of our most personal financial behavior, fueling a deep distrust of financial authority. When platforms profit from our data without truly explicit, clear consent, we download these free apps, believing they simply offer a service, but the deeper truth is that you are often the product. Your trading patterns, your watch lists, your search queries, even your demographic data are meticulously collected, analyzed, and often monetized, sold to hedge funds or advertisers. This reveals a counterintuitive truth that reframes how we view investment uncertainty. The more engaged you are with a free app, the more valuable your data becomes. This creates a powerful incentive for platforms to encourage high activity, not necessarily high quality, patient investment decisions. It's a subtle shift in focus, away from your long-term wealth and towards their immediate data revenue. You might believe you are freely observing the market through your app, but in reality, you are under constant observation. Your every financial move recorded and analyzed, not for your benefit, but to optimize the platform's revenue streams. It's a quiet panopticon of profit, where your digital footprint becomes their goldmine. To reclaim some of this lost ground, consider implementing a personal digital data audit for your financial apps. This involves a careful review of their privacy policies, specifically looking for data sharing clauses, disable any non-essential tracking features, and actively seek out platforms with transparent data governance models, prioritizing those that align with the rigorous data security principles found in strategic finance. This isn't about paranoia, it's about informed decision-making, about understanding the unseen costs, and protecting your financial vitality from subtle, persistent drains. In moments of market turbulence, an overwhelming sense of information overload can descend, leaving us without clear synthesis regarding systemic risks. This often leads to a profound sense of investment inadequacy when faced with the fragility of free systems during market dislocations. There's a common distortion that the high user base of these free trading apps equates to robust, reliable liquidity, especially for less conventional assets. However, the concentrated retail order flow on these platforms can actually exacerbate volatility and widen spreads during periods of intense market stress, challenging the very notion of an efficient market under duress. This can lead to a shattered expectation. Your ability to quickly exit positions at a fair price might be severely compromised when you need it most. We've seen this play out in historical flash crash and during meme stock events, where free platforms experienced outages, trading restrictions, or significant delays, effectively trapping investors when liquidity evaporated. The free app, in such times, becomes a gilded cage, promising freedom but delivering paralysis when the market's true nature, like a wild beast, is unleashed. This reveals systemic risks often overlooked by mainstream analysis, leaving financial confidence wounded. To navigate these turbulent waters, consider a three-step risk management technique. First, diversify your brokerage relationships to mitigate platform-specific risks. Do not put all your financial eggs in one free basket. Second, take the time to truly understand the circuit breakers and trading halt mechanisms employed by exchanges. Knowing these rules can temper impulsive reactions during a crisis. And third, stress test your portfolio's liquidity by considering how quickly you could liquidate positions in a black swan event. This draws from the core principles of risk management and portfolio optimization, moving you beyond the illusion of effortless access towards genuine, prepared financial independence. There's an unconfessed lack of transparent, data-backed frameworks for truly independent company analysis and investment decision-making. This often leaves us with a feeling of being outmaneuvered in a competitive financial landscape. The common distortion is that convenience and free access are paramount in investing, but true wealth building, grounded in strategic finance and the enduring wisdom of value investing, demands a deeper commitment. It requires independent research, critical thinking, and a platform that genuinely serves your interests, not merely its own. A counterintuitive truth emerges. The very free app, by simplifying and gamifying, can inadvertently hinder your development of a truly independent critical financial mindset. It can foster reliance on their interface, subtly preventing you from cultivating the deep analytical skills essential for long-term success. It's like being given a map that only shows the easiest paths, preventing you from learning how to navigate the wilderness yourself. Benjamin Graham, the quiet giant of value investing, offered us a powerful mental healing model. Focus on building a margin of safety not just in your investments, but in your entire financial infrastructure. This means choosing brokers based on the quality of their execution, the robustness of their research tools, their transparent fee structures, and a business model that fundamentally aligns with long-term, disciplined investing. It's about building a fortress, not a flimsy tent. Society has, perhaps inadvertently, distorted the image of the independent, data-driven investor into a passive consumer of free services. But you are more than a consumer. You are an architect of your financial future. Consider this powerful analogy. Don't rent your financial future from a free landlord. Instead, own your investment infrastructure, built on the solid, unshakable foundation of critical analysis and truly informed decision-making. This ownership, this commitment to depth, is the real cost of freedom. We have journeyed together through the subtle currents beneath the surface of free trading apps, uncovering the quiet costs that often go unnoticed. We've seen how payment for order flow can subtly erode your execution quality, how gamified interfaces can manipulate your behavioral biases, how your precious data fuels their profits, and how systemic liquidity risks can leave you vulnerable in times of crisis. These are not mere technicalities. They are foundational truths that shape your financial destiny. Benjamin Graham, with his timeless wisdom, taught us that an investment operation is one which, upon thorough analysis, promises safety of principal and a satisfactory return. Operations not meeting these requirements are speculative. This wisdom calls us to a higher standard, demanding diligence and understanding beyond the superficial. This journey is about reclaiming your financial sovereignty, moving beyond the immediate gratification of free to embrace the profound value of informed decision-making. It is about empowering yourself to demand transparency, to scrutinize the true business models behind services that seem to offer everything for nothing. Your focus must shift from the perceived price of zero to the actual value you receive, and more importantly, the long-term impact on your wealth and peace of mind. This calls for a strategic, analytical approach to platform selection. Prioritize brokers known for robust execution, comprehensive research tools, and transparent fee structures. Seek partners whose business model aligns with your long-term wealth-building principles, not just their quarterly earnings. This isn't about finding a perfect system, but about choosing a path that respects your ambition and supports your journey toward financial mastery. Do not rent your financial future from a free landlord. Instead, own your investment infrastructure, built on the solid foundation of critical analysis and truly informed decision-making. This deeper engagement, this commitment to understanding the genuine underlying mechanisms of the market, is the real path to sustainable wealth accumulation. Are you ready to embrace the true cost of financial freedom, and in doing so, truly own your investment destiny?